Today is the 3rd of June 2009. This is Darren from Trade Technicals Blog Spot. I hope everybody is doing well. Bernanke said today that he is urging Congress and the Obama administration to come up with some sort of strategy to curb the record high U.S. budget deficit. Okay, well, I've been saying this for quite some time now, that the way the monetary system is set up, that there's always going to be debt. And as long as Americans are consuming like they are spending more money than they can create, and even then, money is only debt anyway, but nonetheless, they are consuming way too much, that to me, that this is an impossible feat to do unless they eliminate the monetary system completely, which means they would be eliminating the Federal Reserve. I don't see any possible way this could happen, and Mr. Bernanke even said that failing to do so could make the long-term effects of the economy extremely severe. So don't be surprised to see a lot more of this type of news from even the mainstream media really start to boil over, especially now that we are moving into the summer months, and this is the time I expected all of this to really start to come down on us anyway. The May job losses were reported at 532,000, but if you want to get some optimistic news, they actually expected 545,000, so a little bit less of a reduction than what they thought, but nonetheless, we keep on getting 400,000, 500,000, 600,000 job losses each and every month. And I'm a supporter of this number going higher because the resource-based economy needs this to get higher, but quite frankly, we have to eliminate the monetary system for it to be a good thing, as the way they want the economic to recover, as long as these numbers keep going higher, it just can't happen. And they keep on saying signs on the mainstream media that there is signs of a recovery, yet when we have data like this just gives us not only evidence, but I have to say proof that they are lying so badly, because there is none, and they're just trying to do whatever they can to prop up the system or to keep everybody away from I'm going to say possibly whatever they got planned. I don't know what they got planned. All I'm saying is that it just seems obvious that when they say there's recovery, they are completely lying to us. Timothy Geithner was down in China, and he's trying to convince the Chinese that the US dollar is solid, and that the bonds and that their T-bills are completely safe. And I don't know if the Chinese have educated themselves yet on how the monetary system works here, but quite frankly, it's been predicted by the WebBot program, it's been predicted by myself, it's predicted by Gerald Celente, and so many other economists that I listen to. I'm not saying I'm an economist, I just go on the internet, try to get as much information that I can, but nonetheless, the prediction is the United States is going to lose its status as the #1 currency in the world. And of course Timothy Geithner is going to be telling him that, because what's he going to say? Yeah, our money is backed by data, and we are going to be going through a serious collapse. And you just know he's not going to say it. He's going to support his side of the story on it. I was also reading on the Associated Press today, and I found this quite hilarious because I've been saying this for quite some time now. Investors sent stocks sharply lower Wednesday after data on factory orders and the service industry came in below expectations. They keep on giving us reasons why the stock market is going up and why it's going down. They are failing to go through the technical indicators or the true indicators. The technical indicators is because the market is way overextended. Even if the market is supposed to be bullish, we are well above the 5, 10, 20, 50, and 100-day moving averages. They don't say that information, and they're not saying the real reasons. Well, the banks are selling stocks. That's pretty much it. The investors are the banks, at least the ones that are controlling it. It is the ones that have the big funds. If it is these average people on the street, the average regular people like you or me that are putting in $20,000, $5,000, $10,000, even $100,000 on stocks, that does not make the market move up or down that much. But when the banks and all of these major investors are making the plays, they are the ones that are deciding whether the markets are going up or down. The big indicator I'll be looking for is to see how the US dollar and how the bonds market look. Right now, they are both been going down extremely big right now, and they are in need of a relief rally. Just like stocks, the bear market, we're seeing relief rallies. I've been talking about the dollar collapse. Same thing there. They can expect them to have the relief rallies also. And when that's the case, you can expect to see the stock markets really going down. We've had the markets been going up for about 3 months. They are extra overextended. And a bank profit-taking situation coming up would not be that big of a surprise. The markets, they are way overbought, in my opinion, way overbought. And don't be surprised to see these 4%, 5% down days coming very soon. I was saying on the blog today that I think that this sell-off that we started to see today is going to have some legs. And at some point very soon, expect some significant selling in the stock market. I still think that this hyperinflationary period is going to come and the stocks are going to reflect it. I just don't think it's going to happen now. I still believe we are going to have one more washout on the stocks before this happens. So I'm going to end this video at that. I'm going to thank you for watching this video and have yourself a magnificent day, everyone. Bye-bye.